What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about one stock that I've wanted to own for a very long time, but it continues to trade a little bit of a higher valuation. However, it has been selling off two consecutive back-to-back earnings. It has sold off. So in this video, I really just want to go over, reanalyze, reevaluate this company to see whether this stock is finally a buying opportunity or not. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. I would really appreciate that. Subscribe to the channel if you haven't already. And link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, members only videos, discussion channels, Excel spreadsheets, everything's going to be included. And today is literally the last day for that 16% annual discount. So link's going to be down below. We'd love to have you on board. If you have any questions, feel free to reach out and I'm happy to help. So this right here is, and also by the way, connect with me on Instagram. Handle is going to be CASWRP. And I do share a lot of interesting stories, portfolio performances, P&L, questions, polls, everything's going to be done over there. So definitely do connect with me over there as well. So company we are talking about today is going to be Fortinet, ticker symbol FTNT. It's a cybersecurity stock. I right now have no exposure in cybersecurity, unfortunately, and that's one of the reasons why I'm reanalyzing this company, because I do want exposure in cybersecurity because I think that's going to be a big part of the future, as there is going to be more technology, more advancement in artificial intelligence, semiconductors, chips, everything. As we are moving more towards a digital future, cybersecurity, the important and the need for cybersecurity is only going to grow. So this right here is from their presentation. So you'll notice that they've got a very large total addressable market as universal SASE. So they've got 17 billion, 20% CAGR, 14% CAGR for security operations, and secure networking, 9% CAGR, and total TAM, they're expecting to grow from 125 billion to 199, to sub $200 billion by 2027, right? This is straight from Fortinet's presentation. These right here are the numbers, right? So quarter over quarter growth, year over year growth is also what we're seeing for the company. They reported third quarter earnings, a little bit over $1 billion in revenue. Gross margins is just sub 77% with operating income of $371 million. It's actually one of the fewer companies in cybersecurity that is profitable with very strong free cash flows and earnings as well. Operating margins of just under 28%, with net income coming in at $323 million for the company, with 41 cents per share in earnings per share as well. So this right here is going to be the free cash flow. We'll be using this number to kind of forecast what the future looks like for the company and where the intrinsic value is. I wouldn't mind starting a position in Fortinet over the next few days or few weeks here, just to get a little bit of a starter position. And then of course add more as I build that confidence and as the valuation also comes down to somewhat more reasonable levels, as we'll talk about later in the video. And this right here is going to be the guidance for the company for 2023. They're expecting revenues of just over $6 to $6.2 billion, 10.2% year-over-year midpoint growth, which again you can see is decelerating now because the numbers are starting to get bigger and bigger. And we've got revenue, actually that's going to be billings, revenue expected to grow at 20%, 5.2 to $5.3 billion. And we got a gross margins of 76 to 77%, with net income per share is going to be $1.54 to $1.56 per share for the company. So if you take a look at where the stock's trading right now, $53. So if you do 53 divided by $1.54, we're looking at an earnings multiple of 34 times, right? 34 times is going to be the price to earnings multiple for the company right now, which I guess is okay. But the growth is also starting to slow down. So for a slowdown, it is somewhat on the expensive side. This is going to be the numbers, so you can see how consistent Fortinet has been in growing their revenue. So you can see very nice $615 million, growing that to over $4.4 billion. So very nice linear growth here for the company. And gross profit's gone from $434 million to over $3.3 billion, right? So very nice growth over there for the company as well. And operating income has also gone very nicely in parabolic fashion from $72 million to well over 965 on a trailing 12-month basis, sitting at $1.2 billion for the company as well. Very nice profitability. So net income is positive, $44 million to over $857 million, trailing 12 months sitting at just shy of $1.2 billion. And shares outstanding have also gone down from 812 to now under 800 million shares. So they are buying back shares as well. That's exactly what we want to see. Profitability margins, absolutely excellent. We're working with 76, 77% margins here on a gross basis. EBITDA margins at 25%, and we got net margins of 22%, free cash flow margins of 32% for the company as well, with very nice return on capital, return on assets, and return on equity is not given, but return on assets and capital is very, very strong for the company. And if you take a look at net income per employee, right? So profit per employee, another really important metric for efficiency. It's gone from $59,000 to over $84,000. And that's actually very good because that tells us that on a per employee basis, the company's making more profit. That's a sign of very good, efficient business for the company. Balance sheet's fantastic, so no doubts there. $3.17 billion of cash with a little bit over $1 billion of debt. So net debt's going to be sitting negative at negative $2.11 billion. We got a current ratio and a quick ratio of 1.1, 1.3. And a debt to free cash flow is a little bit higher at close to 4.4, but that doesn't really matter because the company has more cash than debt on the balance sheet to begin with. So we're going to ignore debt to free cash flow of a little bit over 4. Valuation. Valuation is a little bit of an issue, as we already know. I guess not really an issue, but something to consider because it is trading at a 34 to 35 times earnings multiple, which again depends on the analyst, depends on who you're talking to. It could be somewhat expensive, somewhat maybe not so expensive. Price to sales trading at a little bit over 8 and 7 times. And we got price to enterprise value to sales, enterprise value to EBITDA, trading at 29, close to 24, 25 for the company, and price to cash flow sitting at about 18 to 20 for the company as well. This right here, earnings expectation from $1.56 to $4 per share. So if you plug in some of these numbers, $1.56, you're going to come all the way down. So $1.56 to $4.11, I think it was, let's see, 406 by 2032. So that's going to be 406 by 2032. This is 2023. We're looking at a growth rate of about 11% in bottom line earnings for the business. Okay, so that's something that we are going to plug in to our analysis as well. So if you do the math here, so if you come back to the analysis, they're guiding for $1.54, 55. Let's just say $1.55 with 795 million shares, so 795 times $1.55. We're looking at $1.23 billion in net income. So we're going to plug that in. 1232 is going to be the net income number. The growth rate, as we already looked at, the analyst expectations is around 11.5, close to 12%. So let's just go with 12% here. And the expected price to earnings multiple. Let's start with 25. Let's see where we end up here. So there you go. 32. Actually, we got to account for share dilution. So minus 2% in share buybacks. And we're looking at sub $40. This has actually been intact for a very long time. Fortinet has had a fair value from my analysis of sub $40 for such a long time. And it's still sitting there at $39.93. This is going to be the sensitivity grid. You can take a look. The different price to earnings multiple and different growth rates, we arrive at different intrinsic values. But for me, Fortinet is a fantastic business, something that I would definitely like to own and invest in, but at the correct valuation. However, it is trading at around $52. So it is still around 25% overvalued, according to my analysis. So again, it's not the end of the day. 25% is still overvalued. But when I look at the long-term 5 years, 7 years, 10 years out, it can be a very small price to pay for what long-term growth and potential looks like. Because if we're looking at a $78 price target for Fortinet over the longer term, then of course $53 to $78 is going to be a reasonable gain if you take a look at the technicals. So if you look at $78 from here, it's going to be about close to 51, 52% gain from where it's trading at the moment. But of course, at sub $40, it would be a much better deal for Fortinet. This right here, $43, $44 was certainly a very, very nice level to be looking at. Fortinet has already rallied close to 22%. It's kind of filled that entire gap in to the upside for this company. So this is going to be on the radar. I wouldn't mind starting a position here, very, very small position, starter position, and then of course dollar cost average in as the price continues to pull back and preferably trades under $40 to add more shares according to this analysis. And on a discounted cash flow basis, if you come over here, they guided for, I think, $2.2 billion, right? Free cash flow. So $2.2 billion is what the last trailing 12 months adjusted free cash flow is. So we're going to plug in 2200. We're going to go with a growth rate of, let's say, 20%, 12% discount rate, 3% terminal growth rate, 10% margin of safety, and let's say minus 2% share dilution. According to a discounted cash flow, the price can be considered as undervalued. If I go down a little bit, let's say 18% or 17% or 16%, let's just do 14%. There we go. So if Fortinet can grow their adjusted free cash flow by 14% over the next 5 years, then they're currently trading at a fair valuation of $50. So that is actually very convincing. That's actually a more confident analysis, because $2.2 billion is the actual free cash flow. Even if they grow by 14% and a 2% share buyback, then the company can be considered as being undervalued, somewhat undervalued, or trading at its fair value at the moment right now. In terms of technicals, this right here, very, very strong support. Next resistance is going to be at $60. And this is exactly where we have previously gone rejected. And we're starting to fill that gap in right now for Fortinet. So hope you all enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, do connect with me on Instagram. My handle is going to be CastWRP. And join our Patreon community. 16% annual discount that does expire tonight. So definitely do check that out. You get access to all the members-only videos, Excel spreadsheets, and the Discord access as well. So always happy investing. I'll see you all in the next video.